Hello traders, we are back again. Today we are focusing more on breaker blocks. I've talked about order blocks, fair value gap. Today we're going to look at the chart and point out valid breaker blocks and how we can use that to catch smart entries. Have it in mind that all this entry models I'm listing out here, what you just need to do is to pick one. You don't need to add everything. Pick one, focus on that, and do what? Bag out funds for yourself. So let's go to the chart, guys.
What we have here, breaker block, it is a felt order block where institutional orders are trapped, leading to a shift in March's structure and a change in the role of that zone, that from support to resistance or vice versa. But for my illustration here, you can see that we got a break of structure here. So, following the order block strategy, all we need will just be for price to come to this particular order block, tap in, push to the upside, same thing with that of the bearish order block, for price to tap in, push downside. But then, if price should come to that order block and break it, more like giving a change of character or further break of structures, that simply means the order block has failed, and now, price coming to test that failed order block is now what we call breaker block. You can also call it a break and retest, but then there are some, confluences you need to see present before you can decide to take trades from that type of point. It's not just about break and retest. So price, pierces through an order block. That simply means the order block is no longer valid, and price returning back into that other block, that is what we call breaker block. And I'm going to show you guys how to actually catch good entries using this particular trading model. So just keep watching. Let's get to know the importance of breaker blocks. Why is breaker block important? A broker block is very important in smart money concept because it helps traders understand where the market has switched direction. So you can also see from this illustration, once we get that failed order block, once price pierces through an order block, you position. All you just need to do is just map it out, waiting for price to come back into that zone, and then you take your trades. It shows that the market has changed direction. And remember, once price clears, a valid order block to the downside, that's now a change of character. And sometimes price can just come, retest the field order block, and keep pushing to the downside. So that is very important to note. Same thing is applicable to that of the bearish structure. Price piercing through invalid order block, and then you map out the failed order block as the breaker block, then wait for price to come into that zone and then push to the upside. Remember, you don't just trade it blindly. There are some confirmations, there are some confluences you need to see present, which I'll show you guys on the next side.
So let's go through the different confluences you need to see present, to map out a valid breaker block. So the first one here, an order block must do what? Fail. A breaker block only makes sense if there was an invalid bullish or bearish other block that failed. Example, a bullish order block that price was expected to respect but instead got broken, just like what we have here. So you can see that we have a break of structure. Now, if we are trying to trade off an order block mapped out, the order block that caused this break of structure, you can see what price did. Price came, tap into the order block and pierce through it without it playing out. So that simply means this order block has failed. All we need to do now is to look for value point to map out the breaker block, and the broken order block will be the failed order block in a way that price will come back to retest. So for the next one, which is number 2, the structure must break. It can either be a break of structure or a change of character. So after the order block fails, price should break market structure in the opposite direction. This confirms the smart money has shifted at a flow. So once price clears that particular order block, make sure it's not trying to go and tap into another order block below or above before be cleared out as liquidity. Make sure that price is dishing out either a change of character or a valid structure before you can consider an order block has failed. So most of the times I prefer when it is giving me a change of trend, given that value change of character, then you can now map it out and wait for price to, correct into it and then drop. Because don't try to map out a breaker block once price is just trying to clear liquidity to tap into a more valued order block that is below. So have that in mind. Make sure that there is a clean break to the downside signaling a change of character.
Or break of construction before you can say that order block has failed. Next on the list, there must be a retest and mitigation. After the break, price should come back to retest the broken order block. Now a broker block, becomes the new point of interest for possible entry. So watch as price is returning back into the broken order block. Wait for that rejection to happen. You can go aggressive, you can also wait for confirmation. But wait for retest to happen to be sure that price is ready to, react from there. Give you your preferred direction. Because sometimes it's just tap in and keep pushing, and that happens when price will just clear liquidity and then tap into the block, and then you may be thinking it's a failed order block and price just keep moving. You just need to play smart with this. I will show you interesting examples. Mitigation when you're trying to catch, trades using breaker blocks, make sure you are working with the discount and the premium zones. So in a bullish scenario, the broker block should be in a discount zone. Discounts here simply means, cheap area for a buy. And then in a bearish scenario, it should be in a premium zone. And premium zone here means expensive area for a sell.
So these add extra confirmation for entries. As you can see, this one now is a bearish scenario. Price has gotten to what? A premium zone. So an expensive area for a sell. So price has been heading to the upside and then finally dished out a clear change of character, which simply means that the market has changed trend. So that is when it is most likely going to play out. Because if you're trying to catch it when the trend is still very strong, no stronger change of character, prices just tilt into the upside or to the downside, then you may just get stopped out because there is no clear change in the market structure. So make sure you are catching it at the discount zone or the premium zone. So the next we have on the list is the entry placement. Very, very important. Most of you may just like tightening your stop loss and the rest, but watch how you place your entries. Now, have it in mind that you can go aggressive or you can work with confirmations. Now, for the stop loss, place it above or below the breaker block with some breathing space. Now, from here, I always consider the last wick rejection after the break. Just like, what I do if I'm trying to take my trades from order blocks. So look out for the last wick rejection and put your stop loss a little bit above or below. If it is a buy, I will show you guys a buy example. And then for the take profit should be at the point of reversal. Very realistic with your trade. And watch, the market play out to your favor.
Let me show you guys a buy example. This is an example for a buy. Now, you can still go aggressive or work with confirmation, for the entry placement. I can see where price, failed here. That is where the order block failed after dishing out a very clean break of structure. And price coming there, you can see there's a little accumulation. Then after that, price cleared it to the upside, given a change of character or a break of structure. And you can see what price did. Price came tested it, which is now a breaker block. You can see it where the order block retest, and now pushed to the direction. Now, this is how you need to approach it very carefully and understand when an order block has failed and how to actually take your entry. And before taking your entry, I will advise that of confirmation. Make sure that price is indeed respecting that point there. Most of the time, price do just give a little consolidation around the order block before it break. That is, more likely to play out than when price would just clear to the upside or to the downside and coming to retest. So always work with confirmation when you are trying to take your trades using breaker block. And remember, for your stop loss, above or below the breaker block with some breathing space. So here, I always look out for the wick rejection before the break, just a little bit below or above the breaker block. So that is how you can catch smart entries using breaker blocks. All right, traders, thanks for watching. Subscribe and get ready for my next video if you want to learn more.